All right, let's get into it. Today, we're unpacking a really wild day in the Tokyo stock market. It shot up to a new all-time high, and then, boom, it just completely flipped. So the big question is, what really happened?
So let's just break this down. The day was a total roller coaster, right? It kicks off with this massive high, a new record, and then whoosh, it just drops off a cliff. We're talking over 300 points down from that peak. Now, some bargain hunters did jump in later, which helped a bit, but man, what a whiplash of a day. And this is where it ended up, down about 168 points. Now, if you just saw that number on its own, you'd probably think, yeah, not a huge deal, right? But that single figure, it completely hides the crazy drama that was actually going on under the surface.
Okay, and this is where it gets really interesting. That headline number, the Nikkei, it wasn't telling the full story, not even close. You see, if you look at the broader market, the TOPIX index, it barely moved. And get this, at one point, something like 70% of all the main stocks were actually up for the day. So what does that tell you? The problem wasn't the whole market. Nope, it was super concentrated. So that leads us to the million-dollar question, doesn't it? If almost everyone was having a pretty good day, what on earth could drag the main index down so hard? And the answer, well, it's pretty fascinating because it's not about a big market panic. It's all about one specific story.
That's it, right there. This whole dramatic downturn wasn't some widespread panic. It was basically a shockwave sent out by one single, very influential company. Their news just completely took over the day.
Just look at this number. It's kind of nuts. Out of that total 168-point drop for the Nikkei, a whopping 140 points of it, 140, came from the plunge in just one stock, SoftBank Group. Think about that. That's just an insane amount of influence for one company to have on the whole index.
So what was the bombshell? Here it is. SoftBank dropped the news that they're making a $2 billion bet on the U.S. chip maker Intel. Yeah, billion with a B. Their goal, is to get a stronger foothold in the whole U.S. semiconductor scene. But the market's reaction? It was completely split. For Intel, this was great news. Their stock popped. But for SoftBank, investors looked at the price tag and started to worry, sending their stock down over 4% and taking the whole Nikkei down with it.
Right, but here's the thing. This SoftBank news didn't just happen in a vacuum, To really get why investors got so nervous, you have to zoom out and look at the bigger economic picture. The market was, well, it was already pretty on edge.
There were really three things putting everyone on their toes. First up, Japanese bond yields were on the rise. That makes stocks look a little less shiny by comparison. Second, the yen was stable, and while that sounds good, it actually took away a big advantage for Japan's major exporters. And third, everyone's pretty much banking on a rate cut from the US Fed, but they're still waiting for the official word. So you put all that together, and you've got this really tense kind of hold-your-breath atmosphere.
And that whole backdrop, that's what leads us to what's next. Because the market is feeling a bit jittery, all eyes are now turning to one single major event on the horizon. An event that could honestly set the tone for, well, the entire global market for the next few weeks.
So it all comes down to this big meeting of central bankers at Jackson Hole. And really, it could go one of two ways. Scenario one, they come out sounding tough on inflation. That's the hawkish view. And that can mean trouble for stocks. Or scenario two, they signal that, yep, rate cuts are definitely on the way, the dovish view. And that could kick off a whole new rally. It's that uncertainty that had traders thinking, you know what, I'm going to take some profits off the table today. So what's the big takeaway from all this? Well, despite the scary-looking headline, this really wasn't a market collapse. Not at all. Think of it more like a healthy cool-down sparked by one single company. The fact that bargain hunters jumped in so quickly to buy the dip, that tells you the underlying feeling in the market is still pretty solid. It feels like the market's just taking a breath before its next big move. And all of that leaves us with the really big question hanging over the day, doesn't it? SoftBank's massive $2 billion bet on Intel. Is this a brilliant long-term strategic move, or is it a super costly mistake? We won't know the answer for a while, but you can bet we'll all be watching to see how this one plays out.